Welcome, guys, and thank you for joining us once again. Thank you for coming to another edition of the Fridays live webinars. Today, we're dealing with the CHF and the Japanese yen. And quickly, do we have some people who actually fancy trading the Japanese yen and the CHF? Can you tell us some of your favorite pairs with those two currencies? If you're currently listening to us on the live, please use the Q&A to communicate with us. So if at some point you've traded the JPY or the CHF before and you really enjoy trading them, please can you let me know in the Q&A box, okay? Let me know if you enjoy trading the JPY or the CHF, or if it is something that you intend to go into after the live sessions today. Just communicate with me. Let me see those who are really, intrigued with trading the JPY or the CHF, or those who has been trading it before now and enjoy trading it. Please use the Q&A to communicate if you have anything you want to say to me, especially surrounding those two currencies that are of interest in the session today. Okay, so we have some responses from people. Oh, someone said, I love trading JPY pairs. In fact, someone is saying, I am currently on USD JPY, which for one is one of the most popular pairs in the market. So I think it's best to say that people actually really enjoy trading these two currency pairs of interest. And Tony also is saying, I would like to learn about the JPY. I trade it, but not so profitable. So I want to learn it more. Okay, good for you. Good for you. We're going to do that today. Ebere says actively trading the JPY, which is really nice to see that a lot of people um trades the JPY. So how come nobody talked about the CHF? So we don't have anybody trading the CHF or who enjoys trading the CHF. So we don't have anybody who enjoys trading the CHF on the live. Okay, someone says, my comment on the JPY is the spike from nowhere, while for USD JPY, today's trading not looking well. Okay, Dotsun says, I trade CHF pairs. Interesting. Well, I think we had little people or little reports from the CHF. We had more from the JPY, which naturally is not surprising. You would always find that a lot of people would naturally look away from the CHF. It's not one of the most popular currencies amongst traders in the global financial market. When you naturally ask people what they trade, you would tend to get responses surrounding US dollar, Australian dollar, New Zealand dollar, Japanese yen, euro, pounds. You most likely not really find people actively talking about the CHF as a pair that they enjoy trading. Hopefully, maybe we can break the ice today. Maybe we can help you see something interesting and give you some opportunities that you can begin to look for when you trade some of those pairs. Let us kickstart the session today talking about these two really interesting currencies that are almost within the same bracket. And for this to make sense, Let us lay a foundation of all the pairs, or sorry, all the currencies that we have in the market. So, for one, we have the same opinion that there are actually eight major currencies in the market, right? So everyone agrees to that. There are eight major currencies in the market. The US dollar, the Canadian dollar, the euro, the pounds, AUD, which is the Australian dollar, the New Zealand dollar, and then we also have the JPY and the CHF. But don't let us add them yet. Can we just make some comments about some of these currencies that we have on the board? Number one, everyone knows about the US dollar, the king of the market. And not only that, we understand that a lot of factors might be responsible for the movement of prices on the US dollar. Not only are we talking about the central bank aspect from the Federal Reserve, we also understand that the Federal Reserve FOMC policies affect the movement of the US dollar. We also know that there are a lot of significant events in the market that plays a major role in how we trade the US dollar. For example, CPI, we also have NFP, we have retail sales, we have PPIs. In fact, we have a lot of high impact events, ISM services, manufacturing PMIs, and then we also have the place of how global events, sentiments also affect the movement of the US dollar. In fact, elections also play a major role in how the US dollar moves. So it means if we want to talk about the dollar, there's a whole lot to talk about. There's a lot of factors that we can mention when we're talking about the dollar. We can go right down to economic aspect of the US dollar. We can go back to the central bank aspect. We can go down to data aspect. We can go back to global phenomenons. We can talk about a lot of things. When it comes to CAD, we can also talk about factors that also moves the Canadian dollar, right? We can talk about the central bank aspect, the Bank of Canada. We can also talk about economic releases, the CPI, employment change, unemployment rate, also a little bit of correlation with the US oil, also talking about how political instability and all of those things could also play a major role in the movement of the CAD. When it comes to the euro, there's also a lot to talk about. Not only can we talk about the central bank aspect, the European Central Bank, and how it affects the movement of the euro, we could also talk about economic data flows, right? PMIs, very important to trade in the euro. We also have economic releases, especially CPIs from countries like Germany, Spain, Italy, that plays a major role in how to trade the euro. Also, politics also plays a major role. Same goes for the pounds. We talk about the Bank of England. We talk about economic data flows, claimant count, CPI, mention it, retail sales. AUDNZD, we also do the same. We talk about their economies, we talk about their central bank policies, we talk about their affiliation with China. We also talk about the fact that they move so well with sentiment, that is the mood of the market. We could also talk about their data, right? We can go down to talk about their CPIs, wages price index, business confidence, and all of that. But then when it is time for you to talk about the CHF, and the JPY. Listen, these two currencies might not have so much to talk about like the rest of the major currencies in the market. For one, yes, they have their own central banks that we must still discuss before we close the session today. But in terms of data flow, they don't really have so much in terms of news events, high impact event that pushes them. For example, the CHF and the JPY don't have all the PMIs in the world. They don't have the FOMCs, or they don't have big events like CPI. It has CPI, but the market does not see it as a big event. worthy of keeping the market quiet. They don't have NFP. So for the CHF and the JPY, it might not be much in terms of how we discuss them, factors that moves them, but at least there are some certain things that you must understand about them that could help you and shape how you think about them going forward. For one, both of them are classified under the umbrella of safe haven currencies. Let's start with that. Let's start with that. They have this umbrella of being a safe haven currency. And you would be wondering what makes them a safe haven currency. Think about it. What does the word safe haven even mean? What does it really mean? Safe haven. Safe and haven. You know, something safe means a place you can hide yourself. Then let us even go into the market definition of a safe haven. Let's even stay in English definition of safe haven. A safe place. For the market, a safe haven is simply an asset that is expected to retain or increase value during periods of economic downturns, geopolitical instability, market volatility. It means they are currencies that the market would immediately think about whenever there is a problem. They are currencies that the market would immediately remember whenever there is something to get away from. If there is an increase in market volatility, if there's political instability, if there is economic downturns, depressions, investors begin to look for safety. Think about it. In the world of investment, generally, an investor would generally have to put his money either into stocks or equities at large or bonds, naturally. Because it is believed that investors will naturally not keep, money at hand. So investors would always have to go through stages where they either take their money from stocks to bonds, or they take it from bonds to stocks. Think about it. What would make someone take his money away from stocks that is highly volatile and can make you a lot of money, but then take it to bonds that offers you safety and you can make so much money from it? It means there is always an interplay of safety and when the market is all right. When the market feels good, feels fine, generally people tend to think, okay, let's put money in stocks. Let's put money in stocks. We should do that. Let's put our money in stocks. We should do that. Why? Because this is very volatile and we can make a lot of money because corporations, firms, people will buy more things and they will increase in value and we can profit off that. But the moment something goes wrong, they also need shelter. They need safety. So naturally, there will be a capital flight from something that is very risky like stocks and something that is very volatile like stocks. They take it down to bonds looking for safety, not worried about the money they want to make. That same flight happens to currencies in the forex market because there is now a disparity between instruments like risk assets as we know them and safe assets. In this case, safe havens, which means the market also must play this out. There must be a time where money must go from risk assets to safe assets, and there would also be a time where money comes from safe assets to risk assets. Listen to me. Safe assets in terms of currencies includes the AUD, the NZD, and also the CAD. Although we also have the euro and the pounds on the list, but particularly the three commodity currencies are top of the list when we think about risk currencies in the market. And then when we think safe, we think CHF, JPY first, and then CHF. Now, why do we have the JPY and the CHF on the safe? Number one, because of the reserve currency nature of the JPY. Yes. The US dollar is not the only reserve currency in the world. A lot of other central banks also keep the JPY also as a reserve currency. A lot of central banks around the world do that. And also, most importantly, because of the nature of the JPY to be used for carry trades. Let me tell you something. For years, Japan had been operating negative interest rates. That is, people could come borrow money from Japan to do other investments in other countries around the world. So naturally, it became a thing that even became a strategy in the market, carry trade, where people would come to Japan, borrow money because there is negative rate to invest in countries that have higher interest rates. So when they do that, taking money away from Japan, investing in other countries, mostly in stocks, i.e. returns, investment. If anything goes wrong, and that thing can potentially impact the value of their investment, don't forget they borrowed the money. So oftentimes there would always be panic and capital flight. Those who borrowed money would naturally take that money and they want to return it back to Japan, therefore increasing the demand for the Japanese yen for exchange to take place. And that's why Japan is a safe haven currency. It's a currency that will naturally get enough bid when there is something wrong. So why is the CHF also a safe haven currency? Listen to this. You most likely would not really find Switzerland in the news for any bad reason. In fact, even for good reasons, they are not naturally in the news like that. But if there's one thing you need to know about Switzerland, Switzerland is one of the most developed countries in the world. In fact, that country has one of the highest per capita income in the world. And not only that, the Switzerland economy is strong by very high standards. And at the same time, they have one of the strongest and the safest banking system in the world. Yes, it does. Switzerland has one of the safest banking system in the world. And also, the economy is also backed by gold reserves as well. So apart from the fact that the country is so developed, apart from the fact that the country has one of the safest financial stability and banking system in the world, an economy that is also backed by gold, which by the way is also a safe asset, is also a reason why CHF is also a safe currency in the market. And that's why they are naturally always classified together. Listen to this. So now, because the market will not keep safe havens and risk assets together at the same time, there must always be an inflow and outflow. It is either the market is moving from risk assets to safe assets, or we are moving from safe assets back to risk assets. Which is why one of the biggest concepts of trading the JPY and the CHF is market sentiment, which is explained by the concept of risk on and risk off. Listen to this. Risk on and risk off. Where risk on is talking about positive market and risk off is talking about negative market. A risk off, a positive market, a situation where the market it feels good, there's nothing bad happening. In fact, maybe there are even good news from time to time. The market sees the opportunity of the fact that there is nothing to run away from to take advantage of the investment opportunities that is available in risk assets like stocks. But because we're not trading stocks in this case, when it comes to currency, a risk on market is an opportunity for traders to buy risk assets against the safe assets. But in situations where there is problem and there's something for the market to panic against or to run off against, risk of negative market, definitely the market also completely moves away from risk assets down to safe assets, which is why they most likely will not go in the same direction. When one is rising, the other one will most definitely fall. And this direction is usually common during a positive market. If there's a positive market, we expect that AUDNZ particularly should be better than the JPY and the CHF. But in situations where we have a risk off, that is, there's problem and there's a reason why the market needs to panic, then they would rise and risk assets would fall. Ladies and gentlemen, one of the biggest concepts that you must understand when it comes to trading the JPY and the CHF is the concept of sentiment and how sentiment affects the behavior of traders on those particular currencies. And two major currencies stands out when it comes to how the market trades the JPY and the CHF, especially during positive market and negative market. In a positive market, risk on, some of the best instruments for you to trade might be USD JPY for a buy, AUD JPY, AUD CHF as well. This might be the best thing for you to be trading, especially when there is a positive market. USD JPY AUD JPY, NZD JPY, AUD CHF, NZD CHF might be really, really good instruments for you to consider when there is a positive market, banking on the fact that its nature as a safe haven would weaken them. And the reverse would go for negative market. And then opposite is the case if it's a negative market. Now, these are not the only options. For example, you could also still trade Euro JPY, Pounds JPY, which naturally are also really nice pairs to trade against the JPY and the CHF. But maybe these ones might be worth your first peak considerations. Okay, maybe they might be what your first peak considerations. Really nice currency pairs that you can consider, especially to key into the safe haven nature of the JPY and the CHF. Another thing that you should also consider for the JPY and the CHF is the current policy stance of their central banks. It is important as well. The current policy stance of your central banks will also play a major role in how you are going to trade these particular currencies. It is key. It is key. So let us talk about the central bank aspect now, right? Let us talk about the central bank aspect. Someone just mentioned talking about trading CHF JPY as a pair. Let's just talk about the central bank aspect a little bit, and then I'll show you something. Although, let's go through this together. Hmm? You must be wondering, how come it looks like CHF JPY has been rising for a long period of time? Why? Look at this. This is CHF JPY. And since September, prices consistently has been going up until recently where he started to struggle. So is there really a clear disparity between the CHF and the JPY? Well, let's establish some facts. In the first place, the central banks, that is the Bank of Japan and the Swiss National Bank, are not central banks that tend to change policies just like every other central banks that we see in the market. In fact, up until 2024, the last time the Bank of Japan tweaked their policy was probably almost 8, 9 years ago. But recently, the Bank of Japan has started, increasing interest rate. And right now, that has been the talk for a while. Like, oh, these guys have decided to change their policy stance. And as we know it, an increase in interest rates would surely help a currency gain value. Why? Because the market believes an aggressive policy is good to control an economy, right? And that makes us buy such currencies in the market. So the Japanese central bank, the Bank of Japan, has been increasing interest rates in recent times. And we saw the effect on most pairs. For example, look at it right here on even CHF JPY. You'd see that for the period of July till around September, right here, the JPY was clearly stronger than the CHF from July till September. July till September. Why? Because the central bank started raising rates. The market kept believing that the central bank, that is the Bank of Japan, would continue to raise interest rates, and the market kept pricing in strength for the JPY. In case you don't believe this, look at the same chart on even USD JPY. You see a strong correlation. Can you see that? Also, between the month of July and September, the same movement on USD JPY is what you are seeing on USD CHF. Are we getting somewhere? Can you see it? The same movement. Are you noticing something? That the same downside that we saw from July to September on USD JPY is exactly the same on CHF JPY. Why? Because on the central bank angle of things, the JPY was clearly better. They were increasing interest rates. They kept talking about being more aggressive up until the dollar started recovering against the JPY. Most of these were owing to what we call a policy divergence between the Federal Reserve and the Bank of Japan. Well, dollar started its own push against the JPY from a very good NFP report in the first week of October, which made the market pricing the fact that the Federal Reserve was not going to cut interest rates as big and as much as we expected them to do in 2024. And that kept, USD better than JPY. It recovered against the JPY, but JPY also had the problem. And what problem was that? We also saw that they also stopped increasing interest rates. They started saying, okay, let's take it easy, step by step. And then again, Japan had a problem. What problem was that? Political instability. The current prime minister of Japan does not have a majority Senate House to push his legislation. Currently, minority is the one ruling in the Senate House in Japan. And that also pressured the JPY in the market. So dollar continued to gain more strides against the Japanese yen. Compare that to also what you're seeing on CHF JPY. You'd see that also after the downside, the upside on CHF JPY is almost similar to that of USD JPY, which means there is actually a strong correlation, guys, between the movement on USD JPY and CHF JPY. For the person who talked about we should analyze CHF JPY, there's actually a strong connection between USD JPY and CHF JPY. Very strong connection. We're not saying the relationship is 100%, but the chart does not lie. The market does not lie. The chart does not lie. The market does not lie. So if you're buying USD JPY, either on the fact that sentiment is positive or either on the fact that the dollar is in a better place compared to the JPY, it could also present an opportunity for you to also buy CHF JPY. Or if you're selling USD JPY, probably because you think the JPY is currently better, maybe on a negative market sentiment or on a central bank basis or even data basis, you should also look for an opportunity to sell the CHF JPY. They have that strong connection. It has that strong connection. So for the person who asked about CHF JPY, the US JPY market might be a template for you in that regards. And USD JPY is a very interesting pair. So apart from how sentiment and the safe haven startup of the CHF and the JPY might determine how we trade them, also their central bank plays a major role, and the activities in their country also plays a major role in how we trade those two currencies. For example, the CHF currently printed a negative inflation in his last report. Negative inflation. And that's not good news, because that's deflation coming up for the country. And naturally, inflation at zero level might mean the central bank needs to increase interest rates. That's why it might mean that the central bank should or might eventually increase interest rates to take inflation back above negative signs. But the central bank right now is not really pushing up to that. So that side is not clear right now. But you can still see that there are moves on AUD-CHF, on AUD-JPY, on NZD-JPY, and NZD-CHF. It is because most people who trade these pairs trade them on sentiment, guys. I won't lie to you. Even if you're going to trade it on central bank decision or databases, it might not last for too long before the market shapes it back again to trading it based on sentiment. And that's why for me, in a strong positive market, like strong positive market, I really want to buy AUD-JPY, AUD-CHF, NZD-JPY, NZD-CHF, pounds-JPY. Why? Because in a strong positive market, the safe haven nature of those currencies will weaken them. But if anything goes wrong, for those currencies I've just mentioned, for example, if AUD starts to suffer against the dollar because of a bad news or an economic data release or because of negative sentiment, not only will it suffer against the dollar, it will most likely also weaken against the JPY and the CHF. Let's look at the trend on this particular asset for now. On the 4 hours time frame, we could see that in the month of November, price has gone up at least up to this point. And the market has actually erased almost 61.8% of that upside of the move in the month of November. And why is that? Because dollar is the strongest currency in the market. It is. And that is weakening the performance of the AUD. Not only that, we are also seeing a couple of data releases for AUD has not been good recently. If you notice, wages price index was not good this week. If you also notice, employment change data for the AUD this week also was bad, which means there is currently a string of negative data for the AUD, which means the market can use that to continue to sell AUD CHF or AUD JPY. But also pay attention to this. On the day where a single good news will come to the market that will make the market either positive or make AUD a stronger currency in the market, if you're looking for pairs to trade, the pairs that should also come to your mind must include AUD JPY, AUD CHF, NZD JPY, NZD CHF. They will be the first on the move to the top. You must always watch out for them. Any cause or change of event will impact them more. Always have them on your radar. If a positive market suddenly switches to a negative market, that's an opportunity to trade AUD JPY for a sell, NZD JPY for a sell, AUD CHF for a sell, NZD CHF for a sell. If there's going to be a switch from negative market to a positive market, that's a time for you to look for opportunities to buy AUD JPY, NZD JPY, AUD CHF, NZD CHF. It is important. This morning was seeing the JPY exert strength against the US dollar. Today, if you look at it from the 1 hour time frame, JPY has made at least about 156 pips against the dollar today alone. Just today alone. Downsides. The question to you, do you think the JPY is really a strong currency in the market? No, not by the trend. The trend in November alone is clearly showing that the dollar is a better currency and in a better spot compared to the JPY, compared to the JPY. But why is JPY strong today? Why is it strong? Why is it looking like he's making a little bit of ground? Let me show you some things. This is US 500 today alone as well. This is US 500. This is an equity that shows us the performance of the top 500 manufacturing companies in the US, which means it's a good metric to measure what the market feels about the stock market right now. And this is clearly showing that money is dissipating from the US stock market, especially on US 500. You could also check US 100 to see if the same thing is happening. But stocks are falling. And when stocks are falling, naturally, it is good news for the JPY on a normal day. Because stocks falling is usually an indicator to a negative market on a normal day. On a normal day, stocks falling is usually an indicator to a negative market. Which means the main reason why the dollar is losing value against the JPY right now is because of what we're seeing on the board. Negativity. In fact, if you check on commodities as well, which could also show us a good picture of what is happening in, see, this is US 100 as well, clearly falling. This is VIX, which measures the volatility levels in the market and how scared the market is. Fear index is also up today. Fear index is up today. So there's negativity in the market. And that should also show US oil was also down recently. It is recovered. Where's copper? I want to see how copper is reacting right now. Well, copper is up after falling for a long time. Look at this much downside on copper for a long period of time. But basically, there are signs of negativity in the market, which justifies why prices are down almost 160 pips on USD JPY. The question is, do we expect this to be a long-term direction? No, because eventually the major thing that determines trend and long-term movement of prices in the market still remains fundamentals. And when you compare the fundamentals of the JPY right now to that of the dollar, it's not even close. Dollar is gaining strength from the fact that Trump won the election, also gaining strength from some really recent hawkish comments from the Federal Reserve. We saw yesterday Fred Powell was saying that, Fred Logan was saying yesterday that we're not going to proceed the way the market wants, so we're going to proceed with caution. I also just read something before coming to class. Another Fed member was saying that even though a cut in interest rates is on the table for the month of December, it is not certain. So we're starting to see some really hawkish remarks from Federal Reserve, which suggests that the dollar still remains in a better spot compared to the JPY. But in the short term, because of negative market, the JPY is stronger, which is good for us. Because eventually, we are going to get into a support that will still help us still buy USD JPY, because that's the long-term direction of the asset we still want to buy. Because dollar is currently better than every other currency in the market. We still want to buy. And that is why when you look at the information on the channel today, for those of us who are not on the HFM channel, it is important. You'd see what we posted today on the channel. Read this. It says US dollar in November, right? It says, what a month. The USD index, which is an index that measures the performance of the dollar in the market, is up 2.63% in the month of November, with price pushing from 103.20 to officially testing 107.00. As the dollar has continued to gain value, there's no way dollar is gaining so much value. Most majors will lose value, right? So listen to this. It says Trump election victory and hawkish expectation from the Federal Reserve is the main catalyst. The USD JPY has sustained an upside movement since the beginning of the month, and we are starting to see some corrections as the JPY gets a little bit of beat today. Now price is testing 23.6% on the fib level, and a breach of this level would most likely see price or set price up for a test of 38.2, which might be a better level for buyer to get in and push the pair further higher. Listen to this. We were discussing USD JPY. As at that time when we wrote this, price was still above the level, and we said that it was most likely going to break, and that will set price up for a test of 38.2. But if you look at the continuation of that particular write-up, it says it is going to set things up for buyers to still take prices up, which means we are still talking about buying USD JPY because of the disparity from the central bank aspect of things and the current catalyst in the market. Sentiment controls the market over a short period of time. It won't last too long. It won't be negative market every single day. Eventually, the negativity will stop supporting the JPY, and the buyers will still be able to get in on further upsides in the market. For me, you really want to enjoy trading the JPY. The USD JPY pair is one of the most dynamic pairs to trade when it comes to the JPY, especially when it comes to sentiment, when it comes to policy divergence between the Federal Reserve and the Bank of Japan. The USD CHF also is a very interesting pair to watch out for. Also keying into the chart, CHF JPY moves and has a strong correlation with USD JPY in the market, which means it could be a source of generating moves for yourselves in the market. But also listen to this, ladies and gentlemen. For me, make sure your technical analysis is also sharp if you really want to enjoy trading those pairs. If your knowledge of technicals is sharp, understand what the market wants to do with those instruments, especially when it comes to sentiment. I've told you, if market sentiment is going to be negative, currencies like AUD will not be able to stand against the JPY. They will fall. They would fall. And you can see, in as much as the JPY is stronger than the dollar, it's also stronger than the AUD. But let us look at it from the bigger picture. You would see that the bigger picture is not that straight as much as the one we saw for USD JPY. We cannot find a trade. It's been struggling. The reason why it's been struggling for a while is because AUD itself also is not performing so well right now. Apart from the fact that the AUD is battered by the strength of the US dollar, also information flow, data flow from Australia has not been good recently, as I told you. Data flow has been a little bit poor, which means we might be seeing more of up and down, push and pull, right? And that might be a factor for you to consider when it comes to trading this instrument. Pay attention to sentiment. Sentiment will play a major role for you to really enjoy trading the JPY and the CHF, especially against currencies like the USD, the AUD, and the NZD. It is key. It is key. All right. It is really, really key. Yes, it did. We call that jawboning. Agoreyo. Yes, we call that jawboning. You see, from time to time, Japanese officials will always try to save market or FX speculations against the JPY with their comments. They can start saying things like, we're watching the market for excessive moves and we're going to act accordingly. You might hear them say, we're going to respond to the market if they aggressively price against, the Japanese yen. But they do that a whole lot. We call it we call it jawboning from them. It doesn't change the market's opinion in terms of what is fundamentally driving the assets. For now, the market does not believe that the BOJ is going to raise rates again this year. We don't think they are going to raise rates again this year. So there's almost no strong argument from fundamentals, given that they are also currently dealing with political instability. Do you get it? I have some tips for you. Yes, verbal intervention. I have some tips for you. Just some really nice tips for you. If the JPY would be better than the US dollar, it would also most likely be better than other risk assets in the market. If USD JPY is going to fall, AED JPY is going to fall. NZD JPY is most likely to fall, as well as CAD JPY. They're most likely to fall as long as the JPY is better than the dollar. So anything that is making the JPY spiral against the dollar, bringing the pair lower, is also another opportunity for you to trade AED JPY downsides, NZD JPY downsides. As soon as the dollar becomes better than the JPY, that could also present some short-term opportunities for you on pounds JPY and euro JPY. The reason why I changed it to pounds JPY and euro JPY is because the current fundamentals also of AUD and NZD is not that clear. So the market might opt for pounds JPY and euro JPY just under the radar. In recent times, if you look at the performance of pounds JPY and euro JPY, you will see a clear difference in the moves. You can see there's still like a trend visible on pounds JPY. So on normal days, if dollar is going to be better than the JPY, it would still give you opportunities to get upsides on pounds JPY and on euro JPY. So, and also there's a strong correlation between USD JPY and the CHF JPY. So that could also help you create some opportunities also in that direction. But the biggest thing that you need to watch out for, especially when it comes to trading the CHF and the JPY, is market sentiment. Its nature as a safe asset puts it at the top of the ladder when there is problem or when there is negativity, and its nature as a safe haven puts it bottom of the ladder when there is positivity in the market. So that's one thing you need to watch out for. Okay, so I'm looking through the comments now, reading out some comments and some questions before we close this, but we're going to say goodbye to our online audience right here. Thank you guys for joining us today. We'll see you again when we have time to come up on screen and share another thing with you. Thank you and bye for now.